The U.S. economy grew more than expected in the second quarter. New data shows the GDP increased 2.8% annually. However, this number is still down from the second half of last year. For more on what all this means about the state of the U.S. economy and what it means for all of your finances, I'm joined by CBS News senior business and tech correspondent Jo Ling Kent. Jo Ling, great to have you. So let's first of all talk about what was fueling this growth.
It's all about consumer spending. We saw consumer spending up about 2.3%. That really drove this higher GDP number. So basically, the economists out there, those who are looking at the market, are saying that this was better than expected, driven by consumer spending, but it does still represent a slowdown in the economy overall. It is a downshift, so to speak. But we do also know that government spending at the federal, local, and state levels also drove this GDP number, as well as business investment. Businesses investing back into their infrastructure and building and investing on that front. So overall, the number is better than expected, but still showing, after we've seen some signs of softening in the economy, a relatively strong number. Also, I want to bring up the fact that, look, jobless claims also came in less than expected. So that's also a positive sign to see, Lana.
So positive in the respect people having jobs, that's good. Consumer spending increasing the GDP, though that does nothing for the Fed's fight against inflation. I'm wondering if you could talk to us all about how all of that plays in and whether that means that we're still looking at a possible interest rate cut by the Fed later this year.
Yeah, the Federal Reserve and Chair Jerome Powell, they're looking for a Goldilocks economic situation to cut rates in September. We do have a Fed meeting and a presser next week where we'll be looking for clues from Powell on what actually will happen in September. We don't expect a rate cut at the end of this month, but the market is still pricing in a rate cut for September, which could be good news if you're trying to get, into the housing market. You're looking for a lower mortgage rate, something a little bit more affordable. But what we know so far is we don't expect to see a significant rate cut, maybe a quarter point here. So that is likely to be perhaps the only rate cut we see before the presidential election come November. But essentially, if you look at the overall situation, we have inflation at 3%. Wage growth is still outpacing inflation, which is a positive sign for consumers and spenders and taxpayers, right? But you also have unemployment starting to creep up, sitting at 4.1%. So all of these numbers, while they mean something individually, are going to compose a picture for the Federal Reserve and the FOMC to make an informed decision when it comes to that meeting next week, as well as that very critical meeting where the entire market is looking at the Fed to possibly cut rates in September, Lana.
We'll be watching it all, and we know you will as well. Jo Ling Kent, thank you.
We'll be there. Thanks.